Brendan Lyons, Head of Private Investments at Perennial Partners. Thanks very much for participating in the Inside Network Alternatives Symposium.
Thanks for having me, James.
It's a pleasure. Brendan, when many investors think private markets, they might picture exciting startups with high risk, high reward profile, but you instead at Perennial look at other private enterprises. So take us through what your investable universe looks like.
Yeah, we concentrate on two major segments of the private market, private growth and pre-IPO and IPO companies. It is quite different from early stage venture, which is perhaps what you're referring to there. Startups, we leave that to others who specialise in that area. And it's different from buyout private equity, where often funds are trying to take controlling stakes or for founders who want to retire. So we're looking for founders who want to stay private for longer, professionalise their business, keep growing, and looking for an institutional partner to share that journey with them.
What does Perennial's investment process look like in terms of, first of all, building a short list of companies that you want to do due diligence on, let alone get around to shortlisting the ones you're actually going to invest?
Yeah, we're quite fortunate. There's a very large pipeline of private companies in the area that we invest in. At Perennial, we're the largest capital pool investing in private growth and pre-IPO in Australia. We've got a dedicated team of 6 people. So we see new companies every day, and last time we counted, between 500 and 1,000 private company meetings a year. So it's a huge pipeline. We're investing in a couple of percent of that number. We filter them very heavily at the start to make sure they fit our broad criteria. So from that, you get up with perhaps 10 or 20% of that pipeline, which you've detailed due diligence on, and you end up investing in a very small fraction of that number.
Speaking of pre-IPO, what role can domestic success stories that people have read about and heard about that are about to go to IPO, what role can those kind of companies play in a portfolio?
Well, I think they're an important exposure in a portfolio for investors. You can make very high returns if you structure something close to an IPO, for example. If you structure it through a convertible note with the right terms, you can make 100%. You can make more than that in a fairly short 1 to 2 year time frame. That's what we try to do with our investments. That's a sort of return that's hard to get elsewhere. It's hard to do it yourself because these are private opportunities that individuals don't get the opportunity to see. And I think in addition, you're doing it in an institutionalised way where you're looking at the whole market, picking the very best opportunities from that, and they're much higher returns than you get from owning straight equities, for example. They're higher returns you get from investing just at the IPO, and they're higher returns than you often see in other private strategies.
How will domestic businesses fare compared with other privately owned assets across the region and globally? What are the specific tailwinds we experience in Australia?
Yeah, I think there are good tailwinds in Australia, and it's something we like to remind ourselves of and potential investors of all the time. Australia is a country with a relatively small population, but very large economy really on a GDP per capita basis, very deep and sophisticated financial market, obviously a very large superannuation and pension system that we know about. We looked at some numbers recently. It was interesting to see that on versus the world, not just the Asian region, Australia was the second largest active IPO market globally. On M&A activity, we're number 4, with the 6th biggest consumer market globally. And so these things are important. I mean, Australia is a great place to invest in private businesses. I think often people like to send their money to Europe or to North America to invest, but we think there's great opportunities here. And having successful stories like some of the ones you refer to, listing here, and sometimes they list overseas, that's good for the Australian private market, and I think it'll continue to go down that path.
What do you see as the biggest potential surprise for investors that 2024 could hold?
Yeah, every year there's a surprise. Every year is different. That's what we say in our business. I think I can think about positive surprise and perhaps a risk or a negative surprise. On the positive side, it feels like we're getting closer to a softer landing than perhaps people would have thought 6 or 12 months ago. What does that mean? It probably means that inflation stays a little higher, perhaps, and interest rates may stay higher for a little longer, but then we're clearly within sight, I think, of the top of the cycle. So generally, the macro environment is getting more constructive, and so there's less risks around that. On the negative side, I think you have to, it's hard to go past the geopolitics, and we've seen that a couple of times in the last few years with what's happened in Eastern Europe and what's happened in the Middle East, and I think that's still the uncertainty. But as time goes on, and we've had a number of these events now, it feels like the market starts to price them in, and so activity levels to us feel like they're going to be higher this year than they were last year across M&A, IPO activity and private markets more generally.
That's Brendan Lyons, Head of Private Investments at Perennial Partners. Brendan, thanks for participating.
Thanks for having me.